Hey guys, Boris Lasser from BK Forex. Welcome to our daily Forex technicals for 425.13, where dollar is kind of dropping across the board in the Asian session. As always, trading foreign exchange on a margin carries a high level risk and may not be suitable for all investors, so I invite you to read this disclaimer very carefully and understand all the risks involved in trading foreign exchange. Now, let's get to the charts, take a look at what's going on. We can see, first of all, on the euro, right over here, just on the shorter term charts, we're clearly trading a little bit higher off the North American session. We went through the 30.50 level, still kind of bunching up around the 30.60 as a resistance level. If we go back onto 4-hour charts, you can see that this is, we cleared the 30.25, but the 30.70 still remains like a kind of a relatively decent resistance level. The key resistance level here was a turn at around 30.80, and then the next big turn is the 30.25. These are the two barriers Euro kind of needs to barrel through in order to get its groove back. On the other hand, the fact that we bounced off the 29.50, the fact that we're firmly above the 30s is a relatively positive sign for Euro bulls, and it looks much more constructive, of course, this morning to the top side on the Euro. We're dropping back into the 30s, then it comes right back into bringing the retest of the 29.50s. But for now, as we move higher, if we can clear the sort of the 70-80 zone, if we clear this zone, it puts us right back into the corridor of the 31.25 as we kind of make a big bull recovery in the euro dollar. Dollar yen, on the other hand, this is again an example of dollar weakness here. We went into the let's go into shorter time frame. We can see this a little bit better. Went into the 99.50 corridor again, pretty much most of the day yesterday, and then one of the key disappointments today was the fact that the Japanese foreign bond buying was lower than the market had expected. This is the sixth or seventh consecutive week that the foreign bond buying was actually negative. The market is looking for this to be positive in order to reaffirm the whole idea of portfolio reallocation, capital flows toward out of the yen into foreign bonds. And the fact that it didn't happen definitely had a small sell-off in the yen. We tripped in the stops at 99s, I think, and came all the way down to 98.99. But kind of consolidating again. It's still very much. This is really an unbelievable battle. It was basically the battle now between 99.99, 99.50. With the bulls and the bears trying to just kind of create the equilibrium, and then the move back into the 99.50 quarter continues to be stymied. But overall, basically, the bear case doesn't come into play until this 99.50 gives way. This is just a spike low off the fake crash, but you can see the 99.50 is a relatively decent longer term support, and that is really the key level. Let me just go back to a more deeper chart. This is really the key level that's going to determine whether we still have the move towards the century mark or whether we kind of just come back and give up and die. Re-entry back into 99.50 today, later in the day, definitely puts us much more in a positive mode. But with every passing hour, it's just it's really hard to read it. You can't say that we have a definitive top here, nor can you say we have a breakout. It's still very much anybody's game to lose as far as both sides of the equation. But to the downside, this area gets broken. That becomes a pretty definitive, I think, rejection of the top side of 98.50. To the top side, we go back into the 99.50s. It's still a matter of time. We really need to clear the hundreds, 110, in order to just validate the dollar yen up move in some concrete fashion. So for the time being, it's off to the sidelines as we watch the bulls and the bears battle it out in these ranges. Cable is trading much better, actually, surprisingly better, ahead of the GDP. On the assumption, I don't know, I guess maybe the GDP may be better than expected, or maybe there's an avoidance of a triple bottom recession, whatever you want to call it. Anyways, bottom line is cable cleared the 53.30 on some stop runs, and now starting to show a little bit of weakness. The key support cable still remains in this 52.50 level for the initial support, and then the much more negative or the much deeper move to the downside is this 52. If we have a complete rejection of the move to the top side again, and this would be yet another lower high if that were to happen, and then a break below the 5200, it's like a 5180 break, that would send a much more negative signal to the market, and that would suggest for cable that the party is over and that we now have downside action dominating. Conversely, a break above 53.50 here, if we have any sort of even modestly positive news, really puts us on a path of recovery back up to a retest of 54, which still remains a very, very serious resistance level. So to the top side is 53.50. That puts us sort of into a run of 54s, and to the bottom, it really doesn't become a grossly negative signal until you break the 5200s to the downside. Lastly, Aussie also enjoying a little bit of dollar weakness flows as we recover above the 103s. 103 still remains a pretty serious resistance level, and those who are trading range, the 103.50, 103 corridor is clearly still one of major resistance. So if you think this is just a flash in a pan, a short covering rally, then clearly this is going to be a zone of interest for you to the short side. As always, trading foreign exchange carries a high level of risk and never suitable for an investor, so I invite you to read this disclaimer very, very carefully. Now, the other kind of interesting stuff that we should look at here, aside from the Aussie, is perhaps the crosses and the euro crosses, and I wanted to look at the euro pound cross particularly because the euro pound cross is basing very nicely against this 85 level here, and I think that's going to be an interesting base here. So this is really a bet in some ways, I guess. It's hardly a bet of a pro euro bet. It's more sort of an anti-pound bet in the sense that if you think the pound starts to crash again, this move now takes us, a positive move takes us back up to 85.50 into the 85.50-86 corridor to the top side. A strong pound move, however, does test the 8500s. I think this level has been tested quite a lot. If 8500s gets broken, it kind of invalidates this positive stutter step move in the euro pound and puts us sort of in a much more distribution pattern and puts 84.50 back into view. So I think we're at key levels here on the crosses to definitely merit a look further. That's pretty much how the morning sets up. Again, the key levels in the euro is the 30.80, 31.25s. In yen, we're still very much unresolved, but watching 98.50 as the absolute collapse to the downside and back into 99.50s into yet another drive into the hundreds. And perhaps the most interesting trades today to look at, given the event risk, is going to be the cable trade to see if the positive news takes us into the 53.50, 5400 corridor, or if the really negative news can break the 52 support, which then in turn marks a much more deeper retracement in cable. That's pretty much how the game's shaping up this morning. Wishing you guys the best of luck and the best of trading. Boris Schlossberg over and out.